Okay, this is Timing Strategies client blog update for Thursday, September the 18th. This is for client communication purposes only. This is not a recommendation to buy or sell or take any investment action whatsoever. If you have any questions, please feel free to give us a call or an email. Our number's on our website at timingstrategies.com, or you can send us an email through there. Also check out our 401k IRA management section. It's a lot of value, and I think a lot of folks would get a lot out of that. That said, we didn't update yesterday. Last update was on the 16th of the FOMC day. We posted on that day, you check our video, that we did get long 20% on September the 16th, which was Tuesday. We also said that if we got a retest and a close somewhere in this level or a little lower, that we would add a little further. We did that yesterday on the 17th, although we did not post that due to our time constraints and family matters. So we are now long 30% as of the 17th, Wednesday, in the indices, and we are also long 35% in sector basket with the precious metals, the oils, the materials, and also we are short some bonds using all the RIDEX sectors funds that are available. Had we gotten a deeper sell-off and a close or a test somewhere down in this level of 1130 on the S&P and a close down there, we absolutely would have gotten long about another 20% to bring our total holdings up to anywhere between 80 to 120%. As it stands now, we're long about 65-70% with the entire portfolio, and that also includes a short position in the bonds. Long story, short story, what I've got an estimation on is that if we can get a test back up into this level, like I said earlier, right at about 1260 to 1280, we may start to take some of that long position off. But then again, due to the extreme volatility, I really do believe that we've seen the yearly lows. I could be wrong, and we'll manage it accordingly based on the market, not my opinion. Ultimately, I feel that we're going to see a move back up, and you can check this video for later dates, right into this level. This is our big sell level, right at about 1380. So at this point, what we're going to do is I'm going to put a note. Right now, I'm just going to call it big sell, and we'll update that as time goes on. But right here at about 1380, 1375, 1380, big sell coming in. That's what we're looking to get short heavy on the market. But for the rest of the year, I have a strong estimation that we've made the low for the year. We might come back down and test this level and get a close somewhere down in this range of about the 1170 level, 1160. And if that happens, we may get a little more long, but not much more, not more than another 10% to bring the total indice basket up to 40%. What I do want to bring your attention to is if you're looking to really get long and get long aggressive for our RIDEX, our Schwab accounts, we actually own the ETFs in the EWM, or excuse me, the EEM, and we also are looking to get long a little more in the FXI, and this is China, and also the EWZ for Brazil. These, I think Brazil is probably the best one, depending on what happens. Gives us a little more opportunity. And then let's take a look at the XLE for our oils. You know, it didn't get the kind of bump that I thought we would have gotten on a day like today, but again, that's short covering longs. And then let's look at the GDX. Nice move in gold. GDX basically didn't get much from yesterday's big move follow through, but I strongly believe that we'll hold these lows, and any testing or a close below there is actually an opportunity to be bought. So anything back down in this level on the GDX, down to the 30 level, $30 price tag, will be a potential buy for the RIDEX end of day system. Now let's take a quick look at the GLD. You know, gold, oh my God, you know, how many stories and thoughts and opinions are out there right now on the GLD. Love it, love it, love it. Long story short, I keep using that metaphor. I think we got gold headed up to, you know, on the metal, $1,300 an ounce, somewhere in this level. We'll keep you updated, but I think like $1,300 an ounce, somewhere around here, is going to give us the next move in gold. So the neat thing with our Schwab accounts is we've got this one, which is the DGP. It's a 2 beta. We've got that, and we also have a little bit of the SLV. We took both of those off a little bit today. And I think, again, estimates are that the GLD is probably going to be, or the DGP, to really get aggressive, is going to be the way to trade this gold market going forward. But very carefully and at the right location, this is going to be the biggest winner of all. Last one we want to look at is the XLF. Oh, those dirty dirtbag financials. Let them rot. I think we put in a bottom. Again, we're going to range between the highs of just 2 weeks ago to where we put in the lows today. By no means are these financials the bargain of the lifetime yet. They may be, but even if they go a little lower, that'll depend. But I don't think that these are really going to be the screaming buy that everybody's talking about. They'll get a squeeze up into this range, and then once they get back up into this range, they'll pretty much are going to settle down and just kind of chop back and forth, up and down in this level. And that is excluding the S&P actually moving higher up into, I guess, the top of the range here, and even up to possibly 1370, 1380. One more point I want to bring to is the Qs, NASDAQ 100. That is another excellent point to be buying right here. We look to add in our Schwab accounts with the Qs if we can get a test or we can get an opening price somewhere, any kind of entry down around this level at the $40.50 level, down to about $40, right about $40. Anywhere right around here will be an excellent buy, because we'll have our stop just below the lows of here, today's low, if we get that. So other than that, if you have any questions, please feel free to give us a call. I wish you all a good night until the next update.